Hi, this is CC back with you. Today I want to talk about an often used strategy in 0DTE trading, same day expiry, an Iron Condor. And I'll show you how that's done on the Options AI platform and how to trade manage. First things first, we're using the Options AI mobile app here, typing in SPY and picking an expiry to generate a Condor trade. And it's as simple as hitting Trade SPY and then selecting neutral and then Iron Condor. Now, once you've executed this Iron Condor, you can see it on the position detail page. I have chosen today to do this example because today is an FOMC announcement, rate decision day, and that comes at 2 Eastern. So this trade we've put on is a couple of hours before that. And what we're looking at now is about an hour into this trade. And so as you can see, it's essentially the same as when we initiated this trade. We sold at 42. Right now it's worth 41 for a $1 profit. It is still in the max profit light green zone. And what you're looking for in this trade is for it to not go into the red or beyond the red, which would be max loss. What I wanted to point to specifically here is the expected move lines coming out from the current stock price. As you can see on the y-axis, they're indicating where options are currently pricing potential movement over the next few hours into the close. Now, this would be larger than, say, yesterday or even tomorrow because of that FOMC announcement. Okay, fast forward about an hour. The FOMC announcement is out. Try to guess where on the chart that announcement was. So obviously the stock is lower. It's toward the lower bound of this trade. And so now is, the beginning of decision time of trade management. Anytime you're trading an Iron Condor, ideally you want this stock to remain towards the center of the trade. Give yourself room so that if the stock makes any sort of sudden moves, it stays within that max profit zone. I can tab over and see how my metrics have changed, my probability of max gain, my probability of max loss. But what I'm really looking for here is where's the current stock price and where's the expected move? What are options pricing as the possibility for movement the rest of the day? Now, the stock made this initial move down on the Fed announcement, but it is sort of held above my short strike. This trade is down about $4. It's not much of considering that it was risking 48 originally. So what I'm doing is, I'm making that decision. Is this worth risking? The dynamics of this trade have changed. The stock is now really tight towards my short strike, and I'm not really down much money on this trade. I would look at this and I would say, if this stock were to bounce and continue to bounce, then maybe I would give this trade another chance. But right now I'm looking at this and I'm like, this is a very good moment to potentially take this trade off for a very small loss, not risk the balance, and then live to fight another day. Now, for demonstration purposes, let's let this run out a little bit and see at different points, like whether this becomes max loss and the stock continues to go lower, the market continues to go lower, or do we get a little bounce here? Fast forward in the day a little bit, and we have gotten that bounce, but the stock and the market, the SPY and the market is still very volatile. Again, I'm focusing in on these expected move lines, and that lower bearish expected move shows a very real possibility that the stock could make new lows below where it just bounced, which would mean this trade is a loser. And if that were to continue lower, it could be a max loss. I've gotten lucky. I've gotten my bounce. It is still not back towards that very comfortable spot in the middle of my max profit zone. It is still down towards my short put strike, and this trade is still at risk. So again, another opportunity to possibly think about taking this trade off. In this case, you'd have a pretty decent return of about 30%, and you don't have to risk the rest of this trade. Now, if the ETF were to continue higher and the market was to continue to bounce and it would get back to the middle of this max profit zone, that would change my mindset on this, and I would be looking at those expected moves, and if they were within my short strikes, inside my short strikes, then I might think about taking this into the end of the day. But at this point, I still think that with that expected move line going down below, that I have to be very careful on this trade and potentially take this off. Fast forward again, and the market did indeed go back lower, made a new low. The stock is slightly above my short put strike. It is a small profit, and the expected move line, the bearish expected move, is now actually pointing down towards a max loss potential on this trade. This is too close for comfort. I would have been very happy had I taken this trade off earlier for a profit. I get a second chance to take it off for a very small profit, and that's the way I would look at this scenario. This is why this visual trading on the Options AI platform is so useful. You get a very intuitive feel of where the stock is trading, how the stock is trading on a chart versus your trade, and it allows you to make very intuitive decisions about your current profit and loss versus how much you're still risking versus how options are pricing the potential for further movement that day.